Hello friends and welcome back. Friends, in today's video, we will discuss a very relevant and important topic, regression analysis. Now you might be wondering like what regression analysis, how regression analysis is relevant here. Guys, you might have studied this regression analysis in your stats classes, but today we'll understand the real application of this concept. How we can use this regression analysis part in the relative valuation to make it more sophisticated, more relevant, and more logical. So, first of all, let's understand what regression analysis means and how we are going to relate this with the relative valuation. Let's understand this, guys. Guys, regression analysis. The meaning of regression analysis is finding relationship between independent and dependent variable. Dependent variables. So, how independent variable will change, how dependent variable will change, how the change will in the dependent variable will be, how much change in the dependent variable will be due to change in independent variable. Remember that equation y is equal to mx plus c. This equation is as per regression analysis. This equation tells you what's the relationship of y with x. M and c, they are constant. M is the coefficient of x, right? And c is the intercept, constant, right? So this relationship tells you what? How y will change. How y will change due to change in x. Due to change in x. Now, guys, how we are going to relate this concept with relative valuation? Let's understand. Guys, in relative valuation, we discussed P versus PEG multiple. And in fact, we discussed this part for every multiple, that where how price to earning multiple is neutralized with its growth effect. So we discussed that the price to earning multiple is directly related to growth, expected growth of the company. If company is expected to grow at a higher rate in future, current P multiple would be high. If this expected growth is down, current P multiple would also be on the lower side. So current P multiple, current price is affected by two things: current earnings, EPS, which we are neutralizing by dividing P with EPS, price with EPS, and another impact is growth. So we neutralized impact of growth by dividing P with growth, and we got PEG, right? So basis of calculation of PEG is, we are saying that individual companies' current P multiple can be higher and lower, not because the company is expensive or cheap. It may be because of difference in their expected growth. So with this PEG multiple, we are trying to neutralize impact of this growth, because different companies' expected growth can be different what you have in your comparison list. But guys, the only limitation with this PEG multiple, and which goes with every multiple, we also discussed, EV sales by growth multiple. We applied same concept with all other multiples. So the only problem with this equation is, this method is, here we are assuming proportionate relationship We are assuming what? Say, let me rub this. So guys, here we are assuming that there is a proportionate relationship between growth and P. They are proportionate, they are correlated in proportionate manner. This relationship is proportionate, means in case company's current growth is 5% and current P is 10 times, right? If this growth increases to 10%, if company changes in its guidance that the growth in the future, my growth is going to be 10%, as per PEG, company's current P multiple should jump to 20x. Then only their current PEG will come at the same level. But that does not happen. With change in growth, yes, P multiple will react, right? If growth estimates are going up, price will go up and P multiple will also change, but not in the proportionate manner. So solution is what? Guys, here we can apply more sophisticated method to discount this growth in the multiple. And this method is what? Regression. We can try to find an equation here. Regression equation between independent and dependent variable, where equation related to just one factor, y is equal to mx plus c, one variable equation. So one variable is what? Here the y is dependent variable. So if I replace y with p, price to earning multiple, I'm interested in knowing relationship between current price to earning multiple with its x. X is what? Growth. Ki how current P multiple should change due to change in the growth. If I put growth ka percentage here, I should get resulting P multiple for the company. So this way I can find better relationship between price to earning multiple or any other multiple, EV to sales, EV to EBITDA, with other factor which is growth, fundamental indicators of the company. Guys, this M and C, these numbers are constant. It will not change with the change in growth. So how we'll find this M and C? Regression equation will tell you. So when you will run regression equation, it will tell you, okay, based on all the data set, okay, P multiple, y is equal to what? Say, it may be say 2 into x plus 20. So it says, give me value of x in this equation, I'll give you value of P, right? So I'm repeating. In case y is equal to 2x plus 20, 2x plus 20, in this 2 is constant and 20 is also constant, right? You will get to know this is what coefficient of x. This is coefficient of x and this 20 is what? Intercept. This regression equation will tell you. So when you will provide, data set of all comparable companies, their P multiple and their growth percentage, if when you put this into regression equation, it will tell you, okay, what the relationship is established. The relationship is 2 into growth. X is what? Growth. You multiply growth with 2 and add 20 in this, you will find your justified P multiple. Y is what? P multiple, right? Dependent variable. So P multiple is dependent on the expected growth. Change in the growth will impact your current P. So guys, let's apply this. Let's apply this regression analysis on our comparable companies, on the example what we took in our relative valuation exercise. So let's first apply this for valuation of Infosys. Let's move to spreadsheet. Infosys valuation, guys. Yeah. So guys, this was the example of Infosys valuation where we applied PEG multiple. So PEG multiple was coming 3.1 and then on the basis of 3.1, we calculated P multiple, justified P multiple for Infosys 21.6. Infosys expected growth was 7%. You can see here expected growth of Infosys 7%, and PEG multiple of industry this. So proportionate relationship based on this, we multiplied this with this, we got 21.6 as justified multiple for Infosys, and we applied this multiple on EPS of Infosys to get fair value, which is 1389. Now I'll try to find fair PE multiple of Infosys using regression. So if I look at the peers trend, right guys, this is how the industry is priced versus its growth. Let me clear this. Okay. So look guys, this is how industry is priced, PE multiple of comparable companies versus growth of comparable companies. I'll try to find relationship between PE and growth using regression. Okay. So this PE multiple is my X, not Y, sorry, Y. It is dependent variable, right? So this is Y and this would be X. Okay. So let's establish that relationship. For this, to run this regression in Excel, guys, we need to have data analysis pack in our Excel. So make sure you have this data analysis pack, otherwise you can add this going through Excel options. So go to data analysis. There you will get lots of functions here, lots of tools, data analysis tool. I need regression, right? So I'll search RE regression, click on it. You will get this pop-up. Now in this pop-up, it will ask you to first provide input range of Y input range, and here guys I'll select Y input range, which is price to earning multiple. You have to select all PE multiples ka range and complete array. Go back to your window, then X input range, X is your growth. So you need to select growth, EPS growth. Go back. Now guys, output range, just click on this output range and select any cell in your spreadsheet where the area is blank, right? Otherwise it will override this analysis will override all, some part of your spreadsheet. So make sure that this area should be blank, right? There is nothing below this cell, right? And click OK. You got this regression, right? So let's first analyze result of this regression analysis. Guys, as per this regression, R square value, which is the correlation of growth versus P multiple, right? R square means how the P multiple is correlated with the growth. Is there any changes? Is there any relationship between growth and P? It says yes, 70%. 70% impact of growth is on P multiple. There's a 70% correlation between P multiple and growth. It's a very strong relationship, guys. It means 70% strong relationship with growth versus P. P is completely decided by the expected growth of these companies, 70%. Now, second factor, what you have to look at, value of P value. Guys, this value is very important to look at. Value of P. This value should be less than or equal to 5%. So acceptable range, so though acceptable range is 5 to 10%, right? So even 0% to 10%, I'll say, right? But the preferred range is 5% or less than 5%. So what this P value, you can see guys, 0.006 and 0.08. If you convert this into percentage, see, if you convert this into percentage, Alt HP, it is coming 1% and 8%. The important part is X ka variable, right? So X variable value, see, P value of intercept is not much relevant. You can ignore this, but X variable is 8%, which is in my acceptable range of 0 to 10%. Though my preferred range would have been 5%, but it's pretty close to that. It is in the acceptable range. So it shows what? the chances of finding random value with this relationship is very bleak. Random values means it will establish relationship in all the cases, but sometime it just establish random relationship, right? Here the chances of random relationship is very bleak. This is a strong relationship. You will find a proper relationship if you apply these coefficient, this equation here. It says, right, if this size goes to 20-30%, it means you might get some random result out of this analysis. Okay, so this p value is under control, correlation is very strong. It means, guys, this regression y is equal to mx plus c is going to produce very strong analysis, very strong relationship between growth and p multiple, very correlated result. So what the equation we are getting, can you see, guys, coefficients value, intercept value is 20, this is c, x variable value is 56.69, this is what m. So in my equation, if I put this here, y is equal to, y is what, my price to earning multiple, is equal to mx plus c. So here m value is what, 56, this is what value of m. So p is what, 56.69 into x is what, growth percentage, okay, plus c. C is what, 20.69. Relationship between price to earning multiple and growth. You put the percentage of growth here, it will give you justified P multiple of your company. So guys, if I apply this equation to find justified P multiple of Infosys, let's see what we get. So just next to this calculation, I'll try to find justified P multiple. Here, can you see this justified P multiple? This row. So let's find justified P multiple using regression equation, which says what? Equal to mx plus c. M value is what? 56.69. I can directly relate this with this cell B62 into x. X is growth. See, x is what? Growth, right? So growth is what? Growth is 7%, right? Plus c. Plus c. C is intercept, which is 20.69. It gives you justified P multiple for Infosys. Here, as per regression, my justified P multiple is coming 24.67. In case of PEG, it was coming 21.6. So, if I use this justified P multiple, let's see what fair value we get. We'll apply this justified P multiple on EPS of Infosys. I can directly link this with the previous case, right? EPS will remain same. If I multiply P multiple with EPS, my fair valuation is coming 1587. Fair valuation is coming what? 1587, and current market price 1575. And if I check whether the company is underpriced, overpriced, it is slightly underpriced, but I'll say it is almost equivalent to its fair value. Guys, can you see? Currently, Infosys is not overpriced. If you look at the regression equation based P multiple, it is 24.67, and based on this, current fair valuation is coming 1587, current price is 1575, and valuation is almost same. compared to its current market price, close to its current market price. So guys, this is how we can do regression based analysis. We can find justified multiple using regression analysis. So I hope you found this video interesting, and you can see how we can enhance quality of our relative valuation using regression tool. In next video, guys, we'll try to apply this regression equation on other multiples like EV to sales, EV to EBITDA, what we did for BEL and other industries. Okay, thank you.